So, hello students. Let's continue with our journey of our question solving. Today we'll do some questions. So, let's look at question number 8. It says, Y and Z are partners with capitals of 2,50,000 and 1,50,000 respectively on 1st April 23. Each partner is entitled to 9% per annum interest on his capital. Z is entitled to a salary of 60,000 per annum, together with a commission of 6% of the net profits after charging his commission. Net profits for the year ended 31st March 24 amounted to 2,12,000. Prepare partners' capital accounts when the capitals are fixed and also when it is fluctuating. So in this, we have to prepare the partners' capital accounts in any of the cases on the two ways that we can prepare as it is mentioned. Okay, so let's begin. This is solution 8. So when the partner's capitals are fixed, first it is asking us to prepare it when it is fixed. All right, so let's prepare according to the first type. So the first way we prepare it by preparing a partner's capital account. You have the debit and the credit. And we have two partners, right? Y and Z. So we will have particulars Y rupees and Z rupees. Similarly, particulars Y rupees and Z rupees. Okay, so in the partner's capital account, the first thing that we can mention is buy balance brought down, which is given as 250 and 150 respectively on 1st April. So these are opening balances. Since no additional capital or no withdrawal of capital is done in this question, therefore our closing balance will also be there of the same amounts, two balance, carried down. Amount is 250 and 150. Let's close this. So you get 250 here and 150 here. Similarly, 250 and 150. Okay, so this is the first account which we make in this method. The second is going to be a current account. So partners, current account. Again, I'm just drawing it now. You understand what we have to write on the top. So I'm just writing X. Sorry, I think it's Y. It's Y. Okay, Y rupees and Z rupees. Similarly, Y rupees and Z base. Just particulars also, you can write over there. For now, let's continue. So the first item that I will write here is buy. Now, in this, we have been told that we have to charge certain things. We have to give, I mean. So those are things like partners entitled to 9% interest on capital. So interest on capital at 9% on the opening capital. Interest on capital is always taken on the opening capital. We have to remember this. So here also it will be calculated on this amount. 250 and 150, 9%. So buy interest on capital on 250 at the rate of 9%, on 2 lakh 50 at the rate of 9%. 2 lakh 50 into 9%. 22,500. So this is the amount for Y. Similarly, on 150, 150 at the rate of 9% into 9 divided by 100, so 13,500. So 13,500. What else are we giving? Z is entitled to a salary. So Z gets a salary of 60,000 per annum. So by salary, Y doesn't get, Z gets of 60,000 per annum. So that is for the whole year. What else? Together with a commission of 6% of net profit after charging his commission. So he gets a commission also, rate of 6% of the net profit after charging such commission. So by commission, 6% of the net profits after charging such commission. So that means it's going to be on, let's work it out. A net profit after charging such commission. So the net profit of the year is given as 2,12,000. Now Z is a partner. He's getting commission. So this is not a charge against profit. This is, in this case, sorry, this is a charge. Z is a partner, right? And he's getting, what am I trying to say? He's going to get commission, right? So Z is getting commission in this case. So this will be shown within the profit and loss appropriation account because this is an appropriation of profit, right? This is not a charge against profit. So we will show this here and the amount will be calculated as on 2,12,000, we'll calculate 6%, but it is after commission. So 2,12,000 into 6 divided by 100, no, 106 it'll be. So that will give you 12,000. So this amount will be 12,000 over here. Okay, so this is just like we had done in class 11. We can write this down as well here. So my commission, we are just calculating it and showing. So it will be on 2,12,000, right? 2,12,000 into 6 upon 106. So this is the amount which is coming here. Next, anything else that will come in this account? We have to also, if we make this account, we know an amount comes into this account from the profit and loss appropriation account. That is our profit that we get, which we show up in this account. So that profit, let's see how we calculate it. Normally, we will just get that amount by making the account. So I'll work it out for the first part of this question. Thereafter, we will understand it, maybe without doing this working. So I'm just making a profit and loss appropriation account for your understanding. This is the credit side, this is the debit side. Now, put all the appropriations, whatever are you giving. So we have a profit of 2,12,000. So normally we write by net profit. And we write 2,12,000. Then on the debit side, we write all the appropriations. So the appropriations are to interest on capital. Now let's write the total interest. 22,500 plus 13,500. This plus this. So that makes it 36,000. So we will write the whole amount here. Then to salary. Here we write 60,000. Then commission. The amount is 12,000. Now, whatever will be our profit, how will we calculate the balancing figure? So, to profit transferred to partners, or we can just write Y is current account. Here, the amount will be, let's do the difference first. So 2,12,000 minus 36,000 minus 60,000 minus 12,000 gives us 1,04,000. So here we are going to give this 1,04,000 to Y and to Z's current account. And if you're giving each of them, that means you're going to give half of this amount, which is 1,04,000's half, which is 52,000 and 52,000. This will give you a total of 2,12,000 and 2,12,000. Okay. So that's our working note. Now let's put this amount as 5252 in this account, which we have prepared on the top. So when we bring in that, here it will come on the credit side because we are giving this to the partners. So by profit and loss appropriation account, here it is 52,000 and 52,000. Okay. Now let's total this. Let's see how much we get. 52 plus 22 makes it 62, 72, 73, 74,500. So here we will write 74,500. The side 52 plus 12 plus 60 plus 13,500. 137,500. The same amount will be written here. So you will write 74,500 and 137,500. The same will be written on the debit side as well. So I will write to balance carried down. This is my balancing figure. amount is 74,500. Just write the same. So you have to just note this down on the top as well to complete this account. This gives us our partner's current account. So if you look at your answer, it's 74,500 and 137,500. Okay, both are credit balances. That means they will be found on the debit side as a closing balance. So the current account balances are these, and similarly 250 and 150 as my capital account balances. Now, when the capitals are fluctuating, the second part is when the capitals are fluctuating. So here we are going to make one account. Let's make that one account. This part should also be practiced once. So let's do this. We will simply call this partners capital account. Debit, credit. Here, since we have the balances given, we will write it. So the first item that we will write here is Y. I'm just writing the names. So that is Y and Z. Y and Z. You can fill in the particulars in the particulars area. Now, the first thing we discussed we will write will be Y balance brought down. So let's write our opening balance. I suppose it was 250 and 150. So 250 and 150. Next. Now simply just look up in the previous account and you will have to write all these items. So by interest on capital, by salary, by commission. Okay. Can we try and copy it? I suppose we can. So let's copy it. It's good if we can. So let's try and do it. Copy. Let's go down and paste. Okay, so let's try moving this around now. Okay, now let's see. Let me just correct these slightly. So let's write the prefix. Come on. Just a minute. Now let's try. Buy, 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 and buy. So these are our amounts. Okay, the same amounts we have just written it here. Now, let's see what is our balance. So to write our balance, let's total. So 250 plus 22,500 plus 52,324,500. Okay, and the other 150 plus 13,500 plus 60 plus 12 makes it 72 and plus 52 287,500. So let's put this On the side, the debit side, 324,500 and 287,500. Similarly, on the debit side, write to balance, carry down. This is again, as we know, a balancing figure, and write the same amount and 287,500. Okay, so this is what we have to do. And balances, let's check and see if these are the balances left. 324,500 and 287,500. So 324,500 as a credit balance and 287,500 as a credit balance. So this was question 8. Let's do another. We can do this one now. It says ABC are partners in a firm having capitals of 2 lakh, 2 lakh and 80,000 respectively on 1st April. Their current account balances were A being 20,000, B being 10, and C being a debit balance of 5,000. Okay, so by this itself, we are able to say that these partners would be making the fixed or fluctuating. They're making the fixed account, or they're following the fixed account method. Then it says, according to the partnership deed, the partners were entitled to interest on capital at 10% per annum. B is a working partner and is also entitled to a salary of 6,000 per quarter. Profits were to be divided as follows. Okay, so what do we have to make? We have to prepare P&L appropriation and pass the necessary journal entry for apportionment of the profits. Okay, so question number 9. So P&L appropriation account, debit, credit. Okay, let's read it again. So this is our main solution. We have to prepare something which is also, if we want, we can prepare partners capital account. Otherwise, if we can manage it here, we'll do it here. So let's see, if required, we'll make it. Right now, we are told these are capital balances. Then we start with something which is the profit given to us. Before charging any of these above items, this is our profit. So this will come on the credit side in this account. So let's write this. So I'll write by net profit 2,80,000. Then interest on capital at 10% per annum. So 2 interest on capital. Partners are A, B, and C. So A, B, and C. How much are they getting? 10%. So 10% on 2 lakh is 20,000. Then again 20,000. And C is having 80,000. So 10% means 8,000. This makes it 48,000. What else? B being a working partner is entitled to a salary of 60,000 per quarter. The true salary, who is getting it? B is getting it. How much is he getting? 6,000, right? Per quarter. And there are how many quarters? There are 4 quarters. So he's getting 24,000 in the year. What else? Profits were to be divided as follows. So only this much. Now this is only for B. Okay. The, the salary. Hmm. The first 60,000 the proportion to the capitals and the next 1,000, 1 lakh in the ratio of 4:3:1. So here, let's see what is our balancing figure. What you call as your divisible profit. Let's see what that is coming out as. So, two profits transferred to who are the partners A, B, and C. So, A's current account, because this is the fixed method, B's current account, and C's current account. Now, how much is the balancing figure? We need to know that. So, 280 minus 48 minus 24. Minus 48, right? Minus 48 minus 24 makes it 2.8. So 2 lakh 8 is my total profit. Okay, let's write it. I mean, write some working notes. Total divisible profit we just saw came out as 2 lakh 8. Now it says this divisible profit is given in three parts. The first 60,000 in the proportion to their capitals. First is 60,000 in what is the proportion of their capitals? Capitals were 2 lakh, 2 lakh, and 80. If I cut this with 40, so 40,000 into 5, 40,000 into 5, and this will be 2. So 5 is to 5 is to 2 is the ratio. Okay, ratio of the capitals. So 60,000 and 5 is to 5 is to 2. So if I have to divide this, we have three partners who are A, B, and C. So A will get how much, B will get how much, and C will get how much if I divide 60,000 and 5 is to 5 is to 2. So 60,000, how will we do it? We'll take 60,000 into 5 divided by 5 and 5 is 10 plus 2, 12. So 25,000. Then 25,000. And I'm left with 10,000. Okay. Now the second part. It says next 1 lakh in the ratio 4 is to 3 is to 1. So put 1 lakh here now in 4, 3, 1. Again, the same way to divide. So 1 lakh into 4, 4 plus 3, 7, and 1, 8. So 4 divided by 8. You see 50,000, yeah. This will be uh, 50. Then 1 lakh into 3 divided by 8 is 37,500. And 1 lakh into 1 divided by 8 is 12,500. Okay. And then the third. It says the remaining profits to be shared equally. So how much is the remaining profit? You've given 1 lakh plus 60,000. So 2 lakh 8 was the total. 2 lakh 8 was the total. So out of this you've given 60 and out of this you've given 1 lakh. So how much is remaining? So 2 lakh 8 minus 1 lakh 60,000 is 48,000. And it is saying 48,000 in 1 is to 1 is to 1. So 48 divided by 3 will be 16,000. So here we will put 16,000, 16 and 16. Now let's total. So 50 and 25 makes it 75, 75, 85, 85 and 6. 85 makes it 91. So 91,000. This becomes 16,000 plus 37,500 plus 25,000. 78,500. This becomes 16 and 10s, 26, 36, 37, 38, 38, 500. Okay, so these are the profits which we have to give to each of them, which is 91, 78.5 and 38.5. So 91, 78,500 and 38,500. Okay, so this is your total, which is 2 lakh 80. And 2 lakh 80. Okay. Now the question also said give the journal entry for the apportionment of profit. So simply, how are we going to? We have to write this in our main solution. So let's write this here just below this. So you're going to write this on the debit side. So P and L appropriation account debit amount was 2 lakh 8. 2. Here there are 3 partners. So A's current account to B's current account and to C's current account. Amount as we have written 91, 78, 500. And 38, 500. Narration being the profit transferred to partners current account. Okay. So this is our final answer. Let's look at our answer in the book. 91, 78, 5 and 38, 5. So this is our answer. Let's look at this question. Question 10 says ABC entered into partnership on 1st April with capitals of 10 lakh, 8 lakh, and 5 lakh, respectively. On 1st of July 22, B advanced 2 lakh, and on 1st of December 22, C advanced 1 lakh by way of loans to the firm. Profit and loss account for the year ended 31st March 23 disclosed a profit of 770. So the profit and loss account disclosed a total profit of 7 lakh 70. But the partners could not agree upon the rate of interest on the loans and the profit sharing ratio. This means the partners were not able to agree upon the rate of interest and the profit sharing ratio. So one thing which is not mentioned in the deed is the profit sharing ratio, and it is not mentioning the rate of interest. So profit sharing ratio by default will be 1:1. And rate of interest is not mentioned. That means we will take 6% per annum. So these two are signified by this line, which is mentioned here. Prepare partners capital account and the loan accounts. So we have to prepare two things here. Let's begin. This is question 10. Prepare the partners' capital accounts. Okay, so nothing is mentioned. So we're going to believe that this is the fluctuating method. So simply we will call this partners' capital account. Okay, debit, credit. Now simply let's look at our dates. We have been given dates here. So let's put in dates. ABC entered into partnership on 1st April 2022. So with these capitals. So when they begin their partnership on 1st April 22 with capitals of this means we would have had an entry as bank account debit to capital. Particulars. Then you have A, B, and C. So A rupees, B rupees, C rupees. Again particulars. A rupees, B rupees, and C rupees. This is a normal format. Now, as we saw, 1st of April 22. Here we are going to write by bank account. Amounts would be 10, 8, and 5. 10 lakh, 8 lakh, and 5 lakh. Then on 1st July 22, B advanced 2 lakh and C advanced 1 lakh by way of loans to the firm. Okay, so we are going to make the loan account also. This is asked. So partner's loan account. Again, you have whose loan, who have given the loan, B and C. So particulars B, C. Particulars B and C. Okay, now let's think. Where do we write this balance which is given to us of the loan? So loan account balance will come on the credit side. So I will write by. When I give a loan, what is the entry in my loan account? It is bank to loan. whoever's given the loan. So bank to B's loan or bank to C's loan. But here we have been given the date. So again, we write about the date. Just a minute. Let this get rubbed off. Why is it not rubbing off? Okay, it's rubbed off. Yeah. Let's go again. So here the date of the loan, we will put the first date of the loan is 1st July 22. The advance 2 lakh. So 1st of July 22 by, here you can write date also, okay? So by bank account, we advanced of 2 lakh. C did not give on this date. Then on 1st December 22, C advanced 1 lakh by way of the loan to the firm. 1st December 22 by bank account, nothing, and this is 1 lakh. All right. Now, interest will be given, so that will increase our liability. Here also I'm writing date. Now, interest will be given at the end of the year. So we will put 31st of March 23 by interest on loan, whoever's loan it is. So first is whose loan? B's. So on B is taken in July. So I'm going to give them interest at 6. So 6 twos are 12. So 12,000 is for the whole year. So for 9 months, it is going to be 9,000. 12 months, it is 12,000. So for 9 months, it is going to be 9,000. So here I will write 9,000. Similarly, for the other one, again on the same date, so I'm putting it in the same line. For the other one, it's going to be 1 lakh for the whole year. Sorry, 1 lakh is the loan, and you're taking 6%. So 6,000 is for the whole year. So for 4 months, it is going to be, let's do this multiplication, 6,000 into 4 divided by 12. This is 2,000, right? Yeah, it should be 2,000. So 2,000 would be the interest on this other person's loan. And this is written on the credit side, as we know, because it is increasing the liability. This increases the liability. What is the liability here? The liability here is this loan. So the loan liability is increasing by writing this on the credit side. Then anything else? Yes, let's write our balancing figure because nothing else is coming in this account. So here, the date of closing this account will be 31st March 23 by balance carried down balancing figure. Amount will be 2,09,000 and 1,02,000. 2,09,000, 1,02,000. Again, 2,09,000, 1,02,000. Okay, so that is our account which we had to prepare. Now, what about the capital account? Capital account will show some kind of what are the items? Let's think. What are the items that show up in the capital account? Let's think of it in this way. In this question, we have a loan, and on that loan, we are paying interest. So, this interest we know is what? Which we said it is increasing our liability. This interest over here is a charge against profit. So, if we talk of this, let's make a little working note. If we talk of this, let's make a profit and loss account because the charge against profit is shown in the profit and loss account, credit side, debit side. Now, in this account on the credit side, we have been writing by what profit have we been given. So, by profit and how much is given to us? 7,70,000. 7,70,000. Said the profit and loss disclosed the profit of this, but the partners could not agree. So that means what was not agreed upon? Giving this rate of interest. What was not agreed upon? Dividing it in the profit sharing ratio. So since this is written in the profit and loss account and it is not taken into consideration, these points, which is the rate of interest, it is not taken into consideration. So we are now going to allow that. We are going to give this as an expense for us. So this expense will be shown over here on the debit side. So to interest on loan, and the interest is 11,000, right? Because it is 9,000 plus 2,000. That makes it 11. And therefore you get a net profit now, which is now going to go into the P&L appropriation account. So over here, this amount will be 770 minus 11 makes it 760. So 759. Near 770. So this 759 now is your balancing figure. Okay. So 759 is the balancing figure, which is like the profit now, which is going to be distributed. So how are we going to distribute 759? These partners, as we know, we saw the profit sharing ratio becomes equal. So this 759 will have to be divided between these partners in that ratio. So on which date will this be divided? It will be divided on 31st March 23 by profit and loss. This will come from the P&L appropriation account. So let's work this out. I'm doing a little work over here itself. Small working note. So it is 759 into 1 upon 3 because the profit sharing ratio is 1 is to 1 is to 1. So 759 divided by 3 gives 253. So here I will write 253, 253 and 253. If I total this comes out as 1253. Next is 8, 9, 10, 53. And the last is 7, 53. This will come on my debit side. Again, on which date? This will come on the last day of the year. So 31st March 23. I will write 2. Balance, carried down, balancing figure. Amount will be 1253, 1053, and 753. So 1253, 1053, and 753. Let's look at our answer. 1253, 10, and 753. Okay. So that's the final way in which we have to solve this. Next, let's go to which question should we do? Yes, let's look at question 11. It says A and E are partners sharing profits equally. E had given a loan of 4 lakh to the firm on 1st October, and it was agreed that interest will be paid at 9%. Interest on E's loan up to Feb was paid by check on 2nd March, and the balance is yet to be paid. Ask journal entries for the interest of loan for the year ended 31st March 24. Okay, so this is question 11. So we have 2 people. We only have to pass journal entries. A and E are the partners. So again, you will make format of a journal. Here you will write particulars. Date is also there. Then you have journal means you'll write ledger folio. Then you will write debit rupees and credit rupees. Okay, the first thing, any dates are given? Yes, dates are given. So it is saying Isha gave a loan or E gave a loan of 4 lakh to the firm on 1st October 23. It was agreed that interest will be paid at 9% per annum. Interest on E's loan till Feb was paid by check on 2nd March, and the balance is yet to be paid. So when you pay something on 2nd of March up to the month of Feb, taking it on 1st of October, that means you've got interest to be paid for 5 months. So October, November, December, Jan, Feb. So that means 5 months. So 9% on 4 lakh makes it 36,000. That is for the whole year, but we are doing it for 5 months. So let's do that calculation. 36,000 into 5 divided by 12 gives us 15,000. So 15,000 is paid on, when was it paid? Paid by check on 2nd March. So the first entry that we will put will be on 2nd March, in which we are going to put the amount of interest that we are paying. So 2nd of March 20. What year was it? 24. So here I am paying this. So what am I going to write? Interest on E's loan account debit to interest on E's loan account debit to bank, because it is going from our bank. How much is going? We saw 15,000 is going. Okay. After this, what is happening? So the remaining is like it's yet to be paid. That's what it is saying. It's yet to be paid. So that means in this case, we're going to show this within his loan account. So that'll be at the end of March. First of all, let's write the narration for this. Here it will be being interest on his loan paid up to Feb. Then 31st March 24. What about the remaining? Interest on his loan account debited for 1 month. There is how much? 36,000 as for the whole year. So into 1 divided by 10. This is 3,000. 2. His loan account. Why is it that I will credit his loan account? Just like in the last case, this is increasing the liability. Okay. Narration being interest provided on his loan for 1 month. And the last one. Now here what am I going to do? Why do I transfer this? This is what for me? This interest on the loan is going to be a charge against profit. So we know at the end of the year, 31st March 24, where do we transfer such charges into profit and loss account, debited to interest on his loan account. How much are we transferring into this from the total, which is 18,000, 18,000. Narration being interest on loan transferred to P&L account or the closure of interest on loan account. Okay, so these are the 3 entries which we have to do. Let's do another. Let's do question 13. Question 13 is saying A, B, and C are partners sharing profits and losses in the ratio of 2:3:5. On 1st July, A and B granted loans of 2 lakh and 1 lakh respectively to the firm. Show this distribution of profits and losses for the year ended 31st March 24 in the following cases. If the profits before interest for the year amounted to 7,500. Okay, so before interest is 7,500. So that means we are given the profits of the P&L account before this interest is given. So therefore, this will come on the credit side. So let's make a P&L. This is part A. So P and L appropriation. This over here we have been given this amount. So that means we have been told by, what is it saying? Profits. Profit before interest. We'll call it by profit before interest. 7,500. Oh, why did we write P&L appropriation? This should be P&L account. That is a mistake. So let's correct it. On sometimes it's buggy. Just wait. Just a while. Take a break. Okay, anyway, let's take the blue pen and let's mark it now. Mark out. Okay, let's forget about this. Okay, back. Come on. Yeah. Then now we have to show this interest. So here I'm going to write two. Um, Interest on the loan, right? So we have to pay interest. Who are these people who have given us the loan A and B, granted loans of 2 lakh and 1 lakh respectively on 1st of July. So on 1st of July means A is given a loan of 2 lakh. So 2 interest on loan to A and B. We have to calculate these amounts. So it will be for A it is 2 lakh into 6 upon 100 into 9 upon 12. 2 lakh into 6 upon 100 into 9 upon 12. 6 into 9 divided by 1200 is 9,000. So this is 9,000. I'm just writing it in the outer column. For B, it is going to be 1 lakh into 6 upon 100 into 9 upon 12. That should be, I think, half of it. So 4,500. Now, what is our balancing figure? Oh, so in this case, are we getting something different? Let's see. Yeah, it is a loss. So where are we getting a balancing figure? 9 plus 4 makes it 13,500. The side also 13,500. Now we will get by loss. Loss transferred to We have three partners, so A, B, and C. How much are we giving it in? We are giving it in 2:3:5. So what is our loss? Our loss is 13,500 minus 7,500, which comes out as 7, 8, 9, 10, 11, 12, 13, 6,000. So here I will write 6,000, which is my divisible profit, and I will calculate it by writing 6,000 into 235, right? Into 2 divided by 2 and 3 is 5, 5 and 5 is 10. Again, 6,000 into 3 by 10 and 6,000 into 5 by 10. So this makes it 6 twos are 12 divided by 10 makes it 1200. This makes it 6 threes are 1800, and this makes it 3000. Okay, so these are the answers. 1200, 1800, 3000 will be the losses. 1200, 1800 will be the losses. Second is if the loss before interest for the year amounted to 7,500. In this case, what will we do? Part B. So profit and loss account. There's a loss it is saying. So two loss before interest. Because it's a loss, so we will write it on the debit side. Profit and loss account. You are having a loss which is given as 7,500. These two, which are a charge against profits, we have to give. So to interest on loan, as we saw in the previous part. So we have given a loan of 9 and 4,500, which is to A and B. A is 9 and B is 4,500. So that makes it 9 and 4 is 13,500. So this will be further a loss. So by loss transferred to A. Yeah, A's capital account, B's capital account, C's capital account. So how much are we transferring? What is our total? 13 and 7 is 20, and 1 is 21. 21. So 21 into 235. Let's see. 21,000 into 2 divided by 10, 4,200. So here I'm just writing it in the outer column. 4,200. 21 into 3, 6,300. And 5. 21 into 5. 105 divided by 10. 10,500. So what is our loss? 42, 63, and 10,500. 42, 63, and 10,500. Okay, so these are some of our questions. Let's now see some questions of another topic, which is interest on drawings. Okay. So these we can just do a little we'll start off with, and we will continue in our next class. But I'll just start this off so that you get to do these and you can practice them. So, question 22.A, let's try. Question is, Mr. Ashok Gupta is a partner in a firm. He withdrew the following amounts during the year ended 31st March. Now, these are different dates on which he has done some withdrawals. Calculate interest on drawings at 9% per annum for the year ended 31st March 24. Okay, so we have to calculate interest on drawings at 9% per annum. So in this case, we have irregular drawings. So in irregular drawings, what will we write? First is the date. Second is amount. Third is time left up to 31st March and product. Okay, so these are the few things which we are going to calculate. All right. First is April 30th, second is June 30th, September 30th, December 30th. April 30th, 36, then 30. Sorry, April means 4. This is 4. Then is 30th June. Then is 30th September. Then is 31st December. December. So 12. Then is 31st Jan. Amount 8, 6, 5, 12, 10. Time left up to 31st March. From 30th of April, you have 11 months. From 30th of June, you have 9 months. 30th of September, you have 6 months. 30th of December, 31st of December, you have 3 months. 31st of Jan, you have 2 months. Product. Now the product is this multiplied with this. So 11 eighths are 38. 9 6 are 54. 6 5s are 30. 12 threes are 36. 10 twos are 20. This totals up to 88 plus 54 plus 30 and 36 makes it 66 plus 20, 228. Now, interest on drawings. Is total product into rate upon 100 into 1 upon 12. So interest on drawings is the total of the product, which is 228 into the rate, which is 9 upon 100 into 1 upon 12. So this will come as 228 into 9 divided by 1200. This is as 1710 rupees. So this is my interest on drawings. Let's see the book's answer. 1710. Good. Next one is similar. Let's look at the next. As per the partnership deed, interest on drawings is to be charged at 7% per annum. So one is a partner of the firm who withdrew the following amounts during the year ended 31st March 25. What will be the amount of interest on so one's drawings? Again, a similar looking question. So we will move ahead. A and B are partners with the sharing profits and losses equally with capitals of this. Then drawings during the year ended were as follows. We grew 6,000 at the end of each month. The deed provides interest on capital and drawings at 10% per annum. Okay, calculate interest on capitals and drawings. Let's try this. It says A and B are partners, sharing profits and losses equally with capitals of 3 and 2. And drawings during the year ended were as follows. So again, these are random drawings. So these are irregular drawings. So A's drawings. This is question 24. So we can just copy that same thing from the top. Okay, so this is better. It's now right. So our date 30th June, 31st July. Just a minute. I think we'll stop and we'll continue again because maybe this is taking time, but it's come back. So maybe we can try it. Yeah, we can. So let's do that a little bit. 30th of June, 31st of July. One October and one March. It's taking time. I think we'll stop on this and we'll continue with this in our next class. Till then, do share, do like, do subscribe, and try out things of the past. Work on the questions which have been done, mark out those which are important. Next time, I'll definitely speak on this point. I want to inform you something about marking out questions and keeping in advance. It's a very important way of studying. So I'll see you in my next class. Till then, keep doing your work well. All the best.